Well, it was a quiet day on Wall Street as most indices closed flat to a little bit lower. The Dow Jones did buck the trend and closed higher, based largely on a big move out of Boeing, which remember the Dow Jones is a price-weighted index, and so a large price stock like Boeing does have a big outsized impact on it. But otherwise, it was another wait-and-see type of a day. We did have some Fed governors come out with statements today out at Jackson Hole with some mixed sentiment. Tomorrow's the big day where we have Jerome Powell speaking, so we'll learn a lot more about that. Of course, David will keep you informed about that in tomorrow night's video. At this point, we do have bullish postures across the board. However, the NASDAQ composite does have a little bit of a formation that sometimes is referred to as a hanging man candle. So we're going to check that out, and then we're going to look at a trade setup from a fintech stock in a foreign country that's doing awfully well. So with that, let's go ahead and get started. Welcome to the Market Outlook video presented by MarketScholars.com. I'm your host, Brandon Van Zee. It's August 22nd, 2019. First of all, if you're new, welcome aboard. Remember to go to YouTube, click subscribe. While you're over there, check out our description area and sign up for our email distribution list. So that way you can be informed of when these videos are released to you, and then also get a heads up on what stocks in the S&P 500 are giving you overbought and oversold cluster signals. In addition to that, we're heavy users of Twitter. My handle is @BrandonVanZee, and we really appreciate those of you that click like and retweet on these Market Outlook related tweets. Lastly, we do have a presence on Facebook as well. Feel free to join us at the web address embedded in the logo in front of you. All right, let's go ahead and dive into the charts. As you can see, I've got chart 4B pulled up here in front of us. This is going to show us the four major U.S. equity indices side by side. That way we can see if there's any sort of distinctions in the charts themselves. I mentioned one of them in the intro, which is the Dow Jones actually finished higher today, so it was up 0.19%. Not a huge day, but again, a big reason behind that is if you look at ticker symbol BA, this is Boeing, that's a massive candle right there. Boeing was up 4.24% as some positive news on their MAX was released, and market caught wind of that and benefited shareholders in that particular case. Now down below on the NASDAQ, I wanted to point out this candlestick formation, which, as I referred to in the intro, is sometimes referred to as a hanging man candle. Now a hanging man looks very similar to a hammer, so let me go ahead and right click and let's maximize the cell here. It looks awfully similar to a hammer. The difference would be whether its placement is up at a resistance area or down at a support area. If you have it down at a support area, it's typically known as a hammer, and its expectation is a kind of a reversal pattern higher. If you find it up at a resistance area, then the expectation is the opposite, where you might have some downside action as a result. Now, the trick with it is you do need the next day for confirmation. So right now, it's just a potential hanging man. We don't actually have one until it's confirmed the next day. So if we do have a down day in the market tomorrow, then today's hanging man candle will have been confirmed. So we'll wait and see on that as well. As I've been mentioning in these presentations recently, my concern at this point is how do we act once we get up to that downtrending moving average? It's great that we've been able to get a couple of bullish postures here along the way, such as right here, and then for a brief time right there, and then again yesterday. So that's all fine and good. But until we get up and over this 30-day moving average, I'm still going to express a little bit of cautiousness around the situation, because the path of least resistance at this point continues to be to the downside for many of these markets, despite having bullish postures according to the market forecast intermediate term line. So that's kind of where we stand with things. The S&P 500 was basically flat today. It was 0.05%, but it does retain its bullish posture. The Russell 2000 was down 0.25% today, but also retains its bullish posture. So kind of we're in the middle of no man's land, I guess you could say, where we have bullish postures but downward trending moving averages, and we're just trying to see how it's going to play out. And whether it's earnings, whether it's the Fed, whether it's trade news, whether it's buyouts. This afternoon there were some buyout announcements. Pivotal Software is getting bought out, and then there's a company over in England that's being bought out by Hasbro. So that could have some impact on markets as well. But as the news hits the various charts, David and I will be here to present the charts to you and see if we can make some sense of it. Let's go ahead and take a look at our next chart setup now. This will be chart 4C. This is our 3 green arrows chart setup. And of course, as I mentioned a moment ago, all of our charts still have price below a moving average. So we know without even looking at this chart that we're not going to have 3 green arrows on any of these, because one of the conditions for 3 green arrows is that the stock has to be trading above its 30-day moving average. In this particular case, none of them are. But what I will say is that on the good side of the coin, we do have green arrows on all the other indicators. So for instance, while we still have the red arrows up here on the moving averages, look down below and you will see that we have green arrows on both the MACD and the stochastics, and that goes for all 4 of our indices. So that's not just the Dow Jones here, but you'll see it down below on the Russell, down below here on the NASDAQ, and then up here on the S&P 500. So if we can just get up and over those moving averages, we'd be back to 3 green arrow status again. But that's going to be a fairly big challenge, considering that moving average is now tilted lower. So it's going to take some extra oomph out of the market participants. Perhaps it's going to take a little bit of positive massaging by either the Federal Reserve or President. But one way or another, that is what is going to be necessary for us to have 3 green arrows again. Until then, we're just playing the wait and see game. Let's go ahead and now take a look at our 1040 crossover. This is chart 4D. Remember, this is a longer term chart. This is 3 years in length for each of these charts. Every one of these candles represents 1 week in time as opposed to 1 day in time. And as I've been mentioning in recent weeks, our only problem child at this point is the Russell 2000. That's your small cap index here in the United States. You can see that we have a pink background color there, and that reminds us that the 10-week moving average is now down and below the 40-week moving average. That is known as a death cross in some circles, and while the name sounds pretty scary, it doesn't have to be a terrible experience for shareholders. As I've been mentioning here recently, until we start breaking down below some of these key horizontal support areas, I'm just going to assume that it's similar to what we've experienced in the past, which is chop and slop. We haven't seen a direct, distinctive change of trend or anything along those lines. We've largely just been tracking sideways on the Russell 2000. It is true it's not keeping up with the other large cap indices, but at the same time, it's not breaking down in a major way either. And so right now, it's just kind of holding the line. And if it bounces from these levels here, we could very well go right back up to where we've had these triple tops in the past as well. So it is true that that's the one that's taking a licking on the long-term indicator of the 1040 crossover method. But I don't think it's time to necessarily alert the press or anything along those lines. We still need to see broken support levels. Moving along now to our 12 grid analysis. This will be chart 4E. This first set of 12 grids will be our intermarket analysis 12 grids. Reminder, background color of these charts will tell you whether we have a bullish or bearish posture. Pink, of course, will stand for bearish. Green will stand for bullish. As you can see, it's a bit of a mixed bag on this first set, as it typically is. Remember, this first set of 12 grids is referring to things that are not necessarily directly associated with the stock market itself. So we're looking at things like bonds and interest rates and commodities, etc. here on this first set of 12 grids. And as you can see, I would say that the best looking charts on the board from a trending perspective right now would be the preferred stocks right up here in that top rung. I would also throw foreign bonds in there, which we've been talking about a lot in the last 3 months. And that's the chart kind of in the middle of the graph there. And then I'd also kind of throw in the REITs as a honorable mention. REITs had a nice day today. Despite a fairly quiet day across most of the other indices out there. REITs were up 0.5%. So that's been an area, as I've mentioned in Tuesday's presentation, where the REITs are number 1 on the sector selector right now. So out of the 11 sectors out there, the REITs are the ones that have the most resilience, the most price strength, and most relative strength versus other sectors, at least by my ranking system. So good to see that the REITs continue to make an upward trajectory right there. Some of the other charts where things are looking a little bit more dire, I would say ag commodities is a real struggle right now. You also have 10-year treasury yields struggling as those inverted yield curves keep on popping into our conversation. Today we actually saw yields go slightly higher. We did end of the day at 1.61% on the 10-year treasury yield. Gold is actually a pretty strong chart too. The problem with gold is it doesn't have a green background like these other three that I mentioned over here. But I would say that if we did resort back to a bullish background color where that intermediate line was rising as opposed to falling, that would also be a chart that I'm looking at with interest to the long side. That's a very nice looking chart right there, consistent upward trajectory in that moving average. Let's go ahead and take a look at our next chart setup here, and this one will be at the foreign stock markets. This is chart 4F for those of you that are following along at home. If you are a premium member of Market Scholars, just a reminder, you do have access to all 34 plus of our charts that we discuss during these presentations. Just simply go to the resources area of our blog to import all of them into your own Thinkorswim platform. All right, so let's go ahead and talk about the foreign stock markets now. As you can see, things look a little bit better than they did on Tuesday. Tuesday, things were looking pretty ugly because we had a lot more pink than we do today. At least we're getting some of these green charts back. Now, having said that, the charts don't look all that great. The only one on the board where we're trading at or above the moving average itself is Israel. That's the only one. So although we do have some green background colors here suggesting that we do have bullish intermediate postures according to the market forecast, price action is still leaving a lot to be desired. So I'm not certain that I would trust a lot of these charts quite yet until they can prove it to me. If they can start trading above the moving average and start stabilizing, showing me maybe some horizontal support levels or some diagonal support levels or some double bottoms, anything to show me that it wants to go higher, I'm still going to lack trust in these charts because right now the moving averages themselves are still pointing down. And so if we do approach them, let's say we bounce off of the bottoms, and we had a lot of those opportunities, right? A lot of these markets were showing us oversold cluster signals. In fact, India is showing us an oversold cluster signal today. So we've had a lot of those oversold cluster signals on these foreign markets. It's about time that some of them have attempted a feeble bounce here in the last week or so. But at that point, you have to ask yourself, does it have the juice to keep on going and actually change the trend on the chart? And I'm guessing right now that it doesn't. Again, I'm willing to change my mind as I see further evidence. But right now, what I see is a whole lot of charts with lower highs and lower lows. So for the most part, I'm staying a bit hesitant around the foreign markets at this particular juncture. Moving right along now to the U.S. markets. This is chart 4G here. And as you can see, it's a much better story in the United States, and it has been, right? One of the interesting developments over the last 10 years is just how much the United States has outperformed. I mean, it's kind of ridiculous. A lot of us here in the United States like to complain about the little 5% loss that we had here or there. You want to see it bad? Go around the rest of the globe. Those markets have been melting down in some cases. So we've had it awfully good here in the United States. We have to remind ourselves of that from time to time. And right now, it's kind of par for the course. We have green charts across the board. Now, again, the charts don't look perfect. We have plenty of them that, I would remain a little bit more hesitant towards. But at least here we show some semblance of strength. Notice in the upper right, we've got technology that's trading right at its moving average right now. Notice in the lower right-hand corner, we've got staples trading above its rising moving average. We have utilities trading above its rising moving average, and we have real estate trading above its rising moving average. So at least there are some places here to look for bullish trade setups if we desire, whereas it's a lot more difficult of a task abroad in other foreign markets. So I, for one, am thankful for that. I know it doesn't have to continue to last forever, but while it does, we might as well try to take advantage of that. Before we get into our trade application example, a quick reminder here on our website that while you're watching the video on our site, and remember, David has been testing some of the ideas there for doing the Market Outlook live video. So tomorrow, for those of you that are premium members, feel free to join him there. I'm not doing the Market Outlook live quite yet. He's kind of going through the hoops, so to speak, trying to work out the kinks on the technology. Once he gets that worked out, then eventually I'll likely transition to that mindset as well. But that particular thing that he's doing with the live video is so that we can get our trade done while the stock market is open and we don't have to miss it. Many of you know that there's plenty of times when we're placing trades after hours when we're normally recording these videos, and by the time the stock market opens the next day, we can't get filled at the price that we wanted to because the market has already moved. So by doing these live videos while the market is still open, we can get filled, and then we're also going to be managing our various trades through those videos as well. So that will be available to all of our paid subscribers, whether they're the Plus subscription or the Premium subscription. If you want to check out our various subscription levels, remember, come to the marketscholars.com website and just click on our pricing tab up here at the top. But for those of you that do watch the video here, the recorded version of it on our website, remember, down below, you have the ability to engage with us on Twitter. In fact, I had a good conversation at the beginning of my question and answer session that I conducted for my students today. So for those of you that are premium members, feel free to go and listen to that. I talked about a lot of interesting stocks today, including Target and Starbucks and Snapchat and all kinds of things. So feel free to check that out. But one of the topics that I discussed was how you can get certain tweets sent your way. And a lot of it revolves around Twitter's algorithms and how often you associate with David and I on Twitter, how often you click like and retweet on our content. The more often you do that, the greater the chance is that you are training Twitter to let them know that you want to see more of David and I's content. So in a way, it's a mutually beneficial relationship. We get the benefit of you guys, giving us exposure by clicking like and retweet. You guys get the benefit of being able to tell Twitter that you want to see more of our content going forward. So we really appreciate those of you that go out of your way to do that. Generally speaking, the baseline level that I'm shooting for when I'm doing these videos is 100 likes on Twitter. We almost got there on Tuesday. 96 of you stepped up to the plate and said, yes, I'll take the 5 seconds out of my day to encourage Brandon and David to spend the 3 hours or whatever it is that we spend on all of the things that need to get done with these videos. So again, we think you guys have a pretty good trade-off there. If you agree, take the 5 seconds and click like for us there. You'll also help train Twitter to let them know that you want to see more of our content in the future. So thank you, as always, for those of you that do that. All right, back on track here now with our and by the way, tomorrow David is going to be teaching his technical analysis class. Remember, that's one of our most popular classes there. Fridays, 11 a.m. Eastern Time. That is one of the classes, one of the 2 classes, along with my dividend growth investing class on Tuesday, that you guys can get at the cheapest price point. In fact, you can also do a 7-day free trial if you wanted to attend that class tomorrow with David. And he does a great job kind of informing his audience about not only things like we talk about here in the Market Outlook video, but all the other things that he's learned along the way as a chartered market technician, a CMT. So he is a very knowledgeable guy, as most of you know, and this is a great way for you to take advantage of his knowledge about technical analysis. All right, back on track now with our trade application example. For this, I'm just going to come on over here and click on, let's do 4A for this particular chart here. All right, so as this gets loaded up, I want to type in a ticker symbol that many of you are probably not familiar with, PAGS. This is Pag Squaro Digital. I don't know if I'm saying that right. I have to be honest with you. It's based in Brazil, so I don't know if that's Portuguese or what. But anyway, this is a nice looking chart. That's the one thing I do know. It's a nice thing about technical analysis, right? It's universal. You don't need to know the language. You just need to be able to identify beautiful looking charts. So whether you're in Brazil or you're in the United States, this is a pretty nice looking chart. At least I think so. As you can see here, this ticker symbol PAGS has been in a significant uptrend for just the last 3 months. But it goes beyond that. You can see some of these numbers up here are quite eye-popping. 179% year-to-date, 100% in the last 6 months, 147% in the last 9 months, 108% over the last year. These are some extraordinary numbers here. And at this point, it doesn't look like it is showing any signs of wear and tear. In fact, you'll see that this stock was up 2% today on a day when the regular stock market was flat to down. You can see that we had a nice bounce yesterday, and with that bounce yesterday, we went from having that bearish posture for one single day back to a bullish posture yet again using the market forecast intermediate term line down below. You'll also notice that the blue line is pointing up, The red line is pointing up, meaning that we have bullish postures on those two indicators as well. And then last but not least, the orange dotted market sentiment line is in the upper reversal zone already. And so that tells us that we also have a bullish posture. So on all four of those lines, technically we have bullish postures on this particular stock here. This is a fintech stock, in other words, a financial technology stock. It goes through things with, payment processing and all of that kind of jazz. But what I kind of liked about it was the fact that when it comes down to the 30-day moving average, it obeys the 30-day moving average. I had a long conversation with my students in class today about that as well. Somehow I got into the analogy of Superman going towards kryptonite. And as he was heading back down to that planet and he saw the kryptonite, he was bouncing off of it. That's kind of what we're looking for, right? Sometimes moving averages can act as magnets. Sometimes it can reject after touching, and that is what has happened here recently, where this particular stock kind of got ahead of itself during this run over here, eventually reverted to the mean being the moving average in this case, and the mean was rejected. It was rejected to the upside the way that you like to see it, because it basically reminds us that the path of least resistance continues to be to the upside. And it was able to do that on 3 different occasions. Touch the moving average there, touch the moving average there, and touch the moving average there. In none of those 3 cases did it close below the moving average. It simply touched it, rejected it, and bounced back higher. So I'm hoping that that will be used as a line of defense for this particular trade. What I'm going to do here is buy a simple, 100 shares by default, but then use a trailing stop on this particular trade setup here. Now, there's a lot of different ways you can think about how big of a trailing stop you want. One basic approach would be ask yourself, how much are you willing to give up off the top? Now, one way to kind of determine that is by looking at how big the pullbacks have been in the recent past. Well, in this chart's particular case, you can see that this was the high on an intraday basis on this candle right here, and this was the low on an intraday basis during that time period right here. So if we got our calculator out and we just did some very simple calculation here, the high on this candle was 48.88. So let's take 48.88 on the calculator, and let's go ahead and take a look at what the low was on this particular candle here, and the low was $42 even. So we subtract out $42, and we realize that that stock basically went down $6.88 from this candle to this candle right here. Now, if in the future that happens again, we'd be willing to put up with that, then we can use this type of a trail stop. If it goes down below that, then what's going to happen is we are going to lock in our losses at that particular level, if it's losses. Remember, this stock could go up $12 tomorrow and then pull back $7 the next day. Technically, we would be locking in gains at that point. But basically saying, if it were to turn around immediately, if our luck was the worst on planet Earth and this thing went down $7 immediately here and went down to $45 or whatever it is, that's around where our trail stop would be here immediately. So that's what we're going to do in this particular case. Keeping it simple, not using options contracts, just simply the stock all by itself. This is a trend trade on a stock that has a bullish posture, a continuation of a upward trending 30-day moving average, and of course a stock that is plotting with nice higher highs and higher lows for not only the last 3 months, but really for the last year. So let's go ahead and place that trade by right-clicking on the chart and then going to buy custom with stop. That loads up our trade down below. I'm going to lock these two together. Again, feel free to position size however is best for your own account in your own paper money account. For our purposes, we'll just leave it at the default 100 shares here. And I am going to change this order on the top. Let's go ahead and put this in at $50 and 50 cents. That gives us a little bit of wiggle room because, again, we have no idea where this stock is going to open in the morning. What we do know is that it's trading at $52.34 to close here today on Thursday. So we'll give ourselves maybe an extra couple of dimes of wiggle room upside. If it gaps up tomorrow, then we'll say, all right, there's always another fish in the sea. But we'll leave it at 50-50 for right now on the buy part of the trade. On the stop portion of the trade, which is listed in the pink here, we do want to change that from day to good till cancel. Now, on the green part, we can leave that as a day order. because the market's already closed, the system will understand that the day that you're referring to is Friday, not Thursday. Down below here on the final line, actually we need to make a quick adjustment here where it says stop. Click on the stop and go to trail stop. So now it says trail stop in there rather than stop. Again, we're going to leave that as a good till cancel order. And then down below here, you can cycle through if you want. You can see that there's a plus and a minus. If you wanted to go to percentage, you could do it that way as well. But we'll just leave it as a plus and minus right here. And I'm just going to type in $7.01. Again, our actual calculation a moment ago was $6.88. But I'm going to give myself an extra couple of cents beyond that, just in case other people are thinking the same way and the market makers want to go down and take the stock down $6.89 to really frustrate some of those folks, but then rally the stock after that. So I'll put my trail stop in there as $7.01. Once I hit enter, it puts a minus sign in there for me. So I guess you could have typed that out yourself. Minus 7.01 on that final line right there. Confirm and send. I'm going to look at this one more time. Just make sure everything looks fine. And it does. And so I'll go ahead and send that off. And we'll see if we can get filled first thing in the morning. All right, well, thank you for joining me here yet again. We do have bullish postures on the indices. However, we remain below falling moving averages, so it's not quite as clear-cut as it has been in the past. Tomorrow's a big day as we have Federal Reserve Chairman Jerome Powell speaking, and I have no doubt that David will be discussing some of the major highlights of that conversation tomorrow in the Market Outlook video, so make sure you're joining him for that. For the rest of you, have yourself a great weekend. Best of success with your trades and your investments. Goodbye for now.